March 9th, 2023. This is the 2000 tick chart on the S&P 500, E-futures, E-mini futures on the Thinkorswim platform. This is what the chart looked like today. This dotted line here is the 100-day simple moving average on the daily chart. And this is the 200-day simple moving average. If you just look at the daily chart, it's kind of interesting. I'll just kind of go over here real quick. This is where all the prices are kind of testing, and it broke through today. Who knows if it's going to bounce again tomorrow. This is how I drew up my chart. I didn't take any trades today. There was one very good trade that I saw, and unfortunately missed it. You don't have to watch this whole entire video. Just go down to the descriptions below, and you can see where I kind of noted all the trade setups that I saw, or just interesting things that I saw. So this is kind of how everything looked. I tried to find a big trading range, but in the beginning, I could only find this smaller one for in the pre-market, the break, and then it goes up. And then I did see a couple of measured moves, and then I tried to, as best as I could, fit this big one, which kind of showed up later because in the beginning I was just working with these smaller ones, these smaller trend channels, and they kind of work for the most part. I didn't see that many trade setups, but if you were able to get on any of them, they kind of ran pretty well. So hopefully this video doesn't take too long because there weren't that many setups that I saw. This is a pre-market. Just these faint dotted lines is just the close from yesterday, and this is where the open is on regular trading hours. I just have those for myself. So this is a pre-market. It was just kind of chopping around. I thought there might be a trading range. I actually had a trading range line drawn from here to here, but quickly kind of deleted them once the market actually started opening and started trading. And as you can see, this red line doesn't exist yet. The prices continue moving up. I draw this trading channel because I saw one touch, two touch, and I liked where it was. I wasn't sure where the top was, so I just put it up here for now. Prices were moving up, and it looks like it touches. It kind of confirms at least, you know, once because it started here and it confirmed, you know, made a second touch, went up, came back down. I don't see any good, clean, safe entries. I mean, you could claim this is a new high, first entry long, second entry long, right off of the EMA. I saw that, but I didn't think it was a worthwhile trade because the signal bar is not that good. And throughout the day, I saw a lot of these kind of tiny little micro setups that were risky or just not, in my opinion, high probability for one reason or another. Could have been congestion, or it was just choppy, or it's coming into a line or something. So I end up drawing, so this exists, and I also draw this other one here because I saw one touch, two touch, and I thought, okay, well, maybe there's a smaller channel working, but this really didn't help in any way, so I could actually probably delete this. It was just there at the time. I thought it might have been helpful, and then I do draw this smaller first leg up, second leg up, and I didn't really see, again, any good trades because these candles were kind of small, very orderly. The first trade that first setup that I saw was this new low, first entry short, second entry short, and then it fails. So on the second entry short, which forms right here, this isn't a very good signal bar to go short. On top of that, the EMA is coming up. So when it goes down, it forms your second entry short, which looks like this. Then the next candle breaks up and it becomes a failed second entry short. Now, I didn't want to take this trade for one of two reasons. Just like the signal bar is like not the best for the second entry short, but it does break above. But then it doesn't have enough power to break past this double top. And the trigger bar, when it forms, I just didn't like the stall out. You know, it just looks like it could just close because it closed bearish, even though it was at the higher end. And it could potentially be a failed breakout. On top of that, if it was going long, I don't know that it'd make it all the way up to here. Most likely it'd come right back down. But I didn't want to short either because the EMA is right there. So it was a no trade for me. Prices continue moving up, and then it crashes right here. So this is a second setup that I saw. So I counted this as a new high, first entry long, second entry long. And then I also saw a first entry short. And so this next candle will tell me if it's actually a failed second entry long or a second entry short. So here, now I know it's a failed second entry long because it broke past this guy, it's crashing through. And it's also a second entry short. Now, the only way I would have wanted to enter it would have been like one tick below this guy, but I don't like this signal bar for the second entry short. It's also, even though it bounced off the EMA, I'm right now playing off of this trend channel. which, confirmed 3 times, and it looks like it confirmed a 4th time. So here, I had no idea when this is forming if it would bounce back up, and then it closed kind of like toward the bottom. Now, in theory, if I was super aggressive, I could have put my entry like 1 tick below here, but also it could be a failed breakout of this guy, and I could go right back in. On top of that, current bias is bullish. So all those added together told me like, there's just too many conflicting variables. It's like, could it be bullish because it's going to go right back into the trading range and go up, bounce off of this guy? Or is it going to be bearish because the EMA is holding and it's going to do a breakout and it's a pretty good signal bar? It's a lot of strength going down. All those just told me, you don't know. Just wait for a better setup. So prices continue moving left and right. I draw this guy now because I think there's invisible potential, not a trading channel, trading range per se, but I do see some kind of support as it's reacting off of that. So I just kind of draw that in. It's kind of chopping around. I saw a small little consolidation area. Technically, you could say this is a new low, first entry short, or you can count it as one big first entry short. Maybe it goes up a second entry short, but I just saw, it wasn't very clean. There's too many ticks, not enough big candle bodies. So I just kind of left it alone. Prices continue moving up. It goes into another consolidation range. I don't really know what to do at this point. There is a new high, first entry long, but it doesn't give you a second entry long. So continues moving down. Gives you a second entry long here now, but to take a second entry long would have been risky because your EMA is right above, and then take a failed second entry long. This candle isn't the best. It's also too far from the EMA again. So I do draw this trend channel going down. Keep in mind this bigger trend channel doesn't exist yet. It shows up later. Prices continue moving down, and I'm having more confidence in this support line here. I do see a new low, first entry short, second entry short. So this is what I saw at the time. I said, okay, it's a little premature to try to go short because I do see this resistance. And it, for sure, kind of broke low. And I said, okay, this could potentially be a new high here. First entry long. If there's going to be a second entry long here, it's running right into the EMA. I'm just not that enthusiastic about it because it's not a good signal bar for the second entry long, and it's below the EMA. Potentially a continuation of the second entry short, but I'm running into this invisible line that I'm thinking is going to have some kind of reaction at this time of the day. So it ends up like if you picked one, you picked the going long, you would have won, and it ends up being like a failed second entry short, but you're not super sure at the time, and so I just left it alone. Prices continue. Now it breaks down below that line. Let's continue chopping around. EMA is coming into play, but it's kind of roller coasting above and below it. So it's hard to really know to trust the EMA or if you're in a trading range, but you're definitely kind of reversing now because you had a bullish uptrend, which is kind of captured by this guy. Now you have a bearish downtrend, or at least it looks like it could be consolidating into a trading range. And again, this trend channel doesn't exist yet. It shows up later, and there was a lot of these intermediate ones that I played with just to kind of get some kind of guidance of where prices were potentially going and where I might see a reaction. Prices continue moving down. Just kind of sitting on my hands. You could claim, yes, there's like a bunch of second entries, but they're not necessarily high probability. It's kind of a crapshoot. EMA is cutting right through all the candles. I don't like that. I don't feel safe with something like that. Well, when this one forms, I do draw this trend line here. And at the time, I wasn't sure where this guy was, so I kind of arbitrarily just put him here. Then I wasn't sure I liked this overshoot, so then I dragged it to here, but there wasn't many confirmations at the bottom, so I was mainly working off the top just to see if there's going to be a reaction and bounce back down. Prices continue chopping, and this is actually where I feel was the best trade of the day. Unfortunately, I wasn't at my desk to take it. I kind of stepped away, but you see a new high. You see a first entry long here, a clear first entry long, pulls back, second entry long. But also I saw a new low here, first entry short, second entry short. Now, if I was here, I would actually bet that price is going to come back down because it touched this, it's coming back down, it's below the EMA close. It's a pretty bullish bar. I would have put my entry 1 tick below. Now, I'm not that concerned that I'm going to get stopped out yet because I think the closest point to get stopped out would be here, and there's enough for a scalp. But I also see there's potentially another stop down here. and then potentially, even further down. So this actually, if I had taken this trade, I think it would have been pretty profitable. And then I would have dragged my runner down. And then, well, then it chopped sideways. And right now the EMA is still being respected. At this point, I'm just wondering, this is the big one that I'm not sure of, and it's just a trend line right now, not a trend channel. I do draw this guy thinking, okay, well, if I connect this one to connect, kind of cuts through here a little bit, especially when it's down here, and maybe touch this bottom one. I played with this in several ways. I kind of drew it. I've had it in several times, like maybe here to, excuse me, here to here, which is where this one was. And I thought, okay, maybe it's here. And then I thought, okay, it's maybe down here. There's a slight overshoot. But I ultimately settled on this one, which gets confirmed later. Well, it gets more confirmations later. Prices continue moving down. It kind of touches the bottom now. So I'm feeling a little more confident about this channel touching once here, kind of touching twice. Depending on how you drew it, you can have it, riding on the bottom of it. And I touched 3 times at the top. So I like this channel as a guideline for where trading could be, or just where price action might react. As it goes down, it kind of keeps chopping around. Through all this, I didn't see any good clean second entries. I mean, there are second entries, but to get a safe one, like if you said this is a new high, it's a first entry long, comes all the way down second entry long, you're going to run into the EMA. Bias is clearly bearish. And then when it goes up to here, to say you want to take a failed second entry long, it didn't really touch the EMA either. You could argue that it's touching the top of this, but I would have preferred if it was actually touching the EMA, then I would have felt a little bit better. But on top of that, it's running toward pretty close to the bottom. And at this time of day, this bottom is already below the overnight bottom. So you're making new lows. So I certainly don't want to short into trying to believe it's a new low. Had this one wasn't as bad because I have potentially a reaction bounce point here. That's fine because there's enough room to scalp out because the candle is great. And if it breaks through, I have another potential bounce point here, but that's already clearly made my profit. So this is certainly a better setup than something like right here. And you're going to see another setup shortly that kind of has the same feel to it, but it wasn't as good a trade. So it's breaking below the 100-day simple moving average. Kind of looks like it wants to hold. And then this is where the second trade is that was similar to this guy, but not as good. The reason being is you got a new low here, first entry short, comes up, makes a second entry short, but you have a repeat of a new high, first entry long, second entry long, and then a failure. It does touch the EMA. It looks like it's coming back down. The things that were going against it for me was there's not much room like the previous setup because you're making new lows, the very new low of the day. You're also running into now price action. You don't really care too much about this 100-day simple moving average. I understand that. But I also know that there are a ton of other traders out there that do look at this 100-day simple moving average and they might see it as support. So even if your price action and your read of the market is correct, there could still be this random error, random characteristic that this could bounce because even a high probability trade, let's say this is a super high probability trade, high probability is not a guarantee. It's not 100%. So that small percentage, let's say it's like a high probability trade, it's like 95% chance it's going to work. That 5% could easily kick in just based upon this 100-day simple moving average existing here. And other traders who don't practice or don't trade the strategy of price action, just trading because they trade, see that, oh, well, obviously this is going to be a buy point. That could ruin your trade. So even if this is a high probability trade, I said it's getting diminished a little bit because of this extra factor. And also it is at the top of the trading range, and the trading range is getting consolidated here. So all those kind of added up told me, okay, this is potentially a trade, but there's not much room. It's a good signal bar. It's not as good as the previous one. And I have to take into account this other thing that most people might take into account and use that as a reason to buy. So if you took it, you kind of sit through this chop wondering, prices continue moving down. This second line is this 200-day simple moving average. So this is a 200-day simple moving average. Again, it's coming, as I said, it doesn't really come into play for price action, but you do have to have a little bit of an awareness that other traders might take it into account. And those other traders could overwhelmingly just do something irrational. So a high probability trade could still fail. And that might be the case here. So I just sat on my hands and just kind of watched as prices kept moving. Here, I don't see anything I really like. It has like these 2-layer trading ranges. I do see a visual second entry short because this could be grouped as one. And I would say like this is one leg up, which is this arrow, and then a second leg up. So on a larger time frame, you say first entry, pullback, second entry, another pullback. So it looked like it might have played out, and it would have been like a visual second entry short, also a potential fail breakout. I saw it like that while I was kind of looking in the weeds, but I also zoomed out and looked at it. But I just said, you know what? I'm not 100% sure this is going to work, so I just don't want to. I mean, you're never going to be 100% sure it's going to work, but I didn't think, I felt there's more downside than upside. I also drew this support line here after the fact, and I thought, okay, well, looking back, maybe it would have been worthwhile trade, but I just left it alone, and I was okay with that. Prices continue moving down. I'm just kind of sitting on my hands. It's moving back up, kind of going back down. At this point, this line here hasn't been confirmed, but it's not really coming into play. This one has been confirmed several times. And now I'm in this kind of this weird range of not sure what price action is, what trend line, trend channel it's following. But I do end up dragging the bottom, creating this channel, this trend line into a channel, and I matched the bottoms here. And I threw in the midline here. So when I look back at this time of day, and I said, okay, there's kind of like a two channels it was playing off of the two-tier channel, top and bottom, and now it looks like it's playing off the bottom one. So I kind of just used that as a guideline, but I wasn't super confident in it at the time. And so prices just kept moving down. I wasn't, using it as a full basis to take any trades yet until I see a phenomenal setup. So it breaks out of this channel now, and it's moving in a very orderly way down, very strong. And then I draw the second trend channel. Now, in a very strong bullish or bearish trend, as I understand, you're going to take any second entries that come back to the EMA because they're probably just going to work, mainly because the momentum and the influence is so strong in the direction of the trend. Now, this is very strong in the direction of the trend, but it doesn't really quite come back very cleanly to the EMA. And if it does, it doesn't really quite set up a second entry because you can count this as a double bottom, or you count this as the first entry, second entry. It doesn't quite hit it. I mean, it does touch this. Maybe it's a good enough trade, but it's also making new lows. So I just kind of sat on my hands and let some of these setups go because I just felt, it wasn't worth the risk or the stress of watching these kind of trades play out. So then it kind of makes a new bottom, goes up, and right here, this second entry short I see as a new low, first entry short, comes up, second entry short. This signal bar, I'm not very crazy about. And I'm also uncertain if it's entering this big channel again, if it's going to reject or continue upwards. So that added up. I just said, you know what? It's pretty also late in the day. I don't want to take any more risks because I didn't take any trades today. And I certainly don't want this to be my first trade of the day. It might just be a no trade day, which turned out to be. So new high, first entry long, second entry long. Again, this is already pretty close to the end of the day. Now, this is also going to run up against the EMA and it's counter trend. So I said, you know what? Just sit back. Don't do anything. You've been good enough walking away with no trades. At least I didn't lose any money. So then prices continue moving up. It's kind of moving. And I do see this failed second entry long. So it's a new high, first entry long, second entry long. You could also count this as a new low, first entry short, second entry short. And this could be like a lower high confirming the second entry short because technically you have a third entry short here. But I wasn't too crazy about this trade. It's also late in the day. It did close below the EMA and it is going with trend. So maybe if this had set up earlier in the day, something like this, I might have taken it, but not when there's only like 30 more minutes roughly in the regular trading hours. Prices continue moving up. I saw this trading range now. It's the same thing. It's a new low, first entry short, second entry short. When I drew this trading range, I saw, okay, it's a potential fail breakout, but the EMA is kind of creeping back up now. It's a good signal bar, but not good enough. Late in the day, as I said, I just didn't want to deal with that. Prices continue moving, and there's a lower high here, but again, confirms a second entry short, but I'm not taking that trade. It's coming right into the EMA now. And then prices just continue chopping left and right and goes into the close. There was one final setup here. Just mention it real quick. It's like a first entry long, second entry long, and then it fails. But there's also a new low, first entry short, second entry short. And again, it's respecting the trading range rules because it went right back down. But look at the time of day where this is. And usually within the last 10 minutes of regular trading hours, things could get pretty volatile and hard to predict, as might just violate or not go per usual price action trading rules. So I just said, you know what, that's okay. Just gonna walk away clean today. It was a learning experience for sure. Got to see a lot of price action, but there weren't too many setups as far as I could tell. The best trade I think would have been this one. Seemed like the safest, most high probability. And then there were some more iffy trades, not iffy trades, but trades that I thought were high probability, but I didn't take. And then certainly some trades and setups that I thought they weren't worth taking the risk, whether they worked out or not. So hopefully that was helpful.